Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Conference. Here with Jeremy Schwartz and Anita Rausch from WisdomTree. Great seeing you guys.
Thanks for having us, Tom.
Great to be here, Tom.
Now listen, we only have a short amount of time, but obviously WisdomTree, one of the leaders in global management, especially regarding currency hedging. Jeremy, let's talk about emerging markets. What's been going on and what do advisors need to be thinking about today?
Yeah, before WisdomTree was known for currency hedging Japan, Europe, half our assets were emerging markets, whether it was high dividends emerging markets small caps, emerging markets debt, but they've been really out of favor for the last 3-4 years. You've had a strong dollar environment, concerns about China, and so EM currencies have been out of favor, EM equities have been out of favor. But this year, you've seen stabilization in commodity prices, you've seen stabilization in fears of China, and emerging markets are leading some of the global markets. So I think there's been a strong rebound and investors are starting to look more favorably on the emerging market allocations.
Can we have confidence that this will continue? We see oil maintaining these levels, commodities, gold kind of rebounding as well. Do you think this will continue?
I think you've had two factors. The Fed's been slow. They say they're going to be slow, so the strong dollar impact has been less, and China concerns have been less. So I think there is some strength here to what's going on in emerging markets. I think investors have been underweight in the last few years. And if you look at the global valuations, the US are at all-time highs, very robust US for the last 6-7 years. EM is the cheapest part of the global opportunity set, so I'd say value investors should be looking at emerging markets.
Absolutely. And when advisors look at emerging markets, investors look at emerging markets, for some reason they're unloved, and liquidity comes to mind. As head of capital markets, talk about liquidity with ETFs, especially emerging markets.
Well, liquidity of ETFs is something that we talk about regularly with all of our clients, and it's not just about ADV, average daily volume. That's the biggest point, right? There's so much more liquidity to an ETF than just what's in the wrapper, because the ETF wrapper represents a whole basket of a whole underlying basket of securities. Those underlying securities have volume unto themselves that's transferable into the ETF. Now, in specific to emerging markets, it's a little bit more complicated, but still just as liquid, just because of the time zones, right? So the ETF might not be available when the whole underlying basket is open, but that doesn't matter. Traders can always access around the globe the liquidity, but not only can they access the underlying basket liquidity, they can access liquidity for other correlated trading vehicles that trade during US hours. And there are a tremendous amount of vehicles that trade during US hours, anything from ADRs. Market makers use ADRs to transfer liquidity. MSCI emerging market futures and other emerging market ETFs, they transfer all that liquidity into what's being traded at the time.
Is there something to the point about picking when you're going to be trading emerging markets? Is there a better time of day to be trading, or is there more liquidity during different portions of the day?
First and foremost, I would always say in any ETF, don't trade during the first 15 minutes and the last 15 minutes of the market. However, in regards to emerging markets, I would say the liquidity is there all day, except for times of large blocks of holidays. So for instance, China has a week off. You just have to pay attention to the underlying holidays.
Yeah.
But outside of that, any time of day, outside of the beginning and the end, is really going to be liquid enough.
Great points. Nita, thanks so much. Jeremy, always great seeing you. Thanks for coming by,
Thanks,
guys.
Tom.
Thank you.